Hello, and welcome to the Kicker Signal Training Program sponsored by the Candlestick Forum. My name is Steve Bigelow. I've been trading in investments for over 35 years, with the past 25 years kind of oriented toward candlestick analysis. And as you've seen in many of the previous training programs, when I started learning how to use candlesticks, I wanted to learn all 50 or 60 signals to take advantage of them. But through the years, I discovered there's only 12 signals that you really need to learn. And the kicker signal is the one that we're going to be studying on this training program, and it's considered one of the 12 major signals. As a matter of fact, the kicker signal is the most powerful of all the candlestick signals. It essentially tells you that there has been a definite change of investor sentiment. And this definite change of investor sentiment has some very expected ramifications. Essentially, it changes the trend of a trading entity or a stock. And not only has it changed the trend, but it's probably going to create a very substantial trend coming out of that kicker signal. The kicker signal is very easy to recognize. The bullish kicker is when you're in a downtrend, the last day opens here and closes down here. The next day they gap it up to at least this area, the previous day's open or higher, and immediately start going in the opposite direction. Whatever created this reversal basically has kicked the investor sentiment in the opposite direction. The true kicker signal is usually a big candle to the downside, followed by a gap up and a big candle to the upside. Obviously, the bigger this signal, like all candlestick signals, the stronger the magnitude that there's been a change of investor sentiment. And when they open it, they should immediately start going positive. Now, that is the rule of thumb. You can still have tails to the lower side here and represent a kicker signal. It's just the true kicker signal with the most strength will usually start immediately to the upside. This allows for easy entry to see this gap up above the previous day's open, especially in the oversold area. But it doesn't necessarily have to be in the oversold area. When it comes to a kicker signal, it is so powerful that stochastics do not have to have any relevance to the trend. You want to see it gap up and start moving positive immediately. The kicker signal has an expected result. If you see a kicker signal, especially on a support level, but it doesn't necessarily have to occur on a support level. Remember, anything that was changing the direction and kicking it in the opposite direction has one result, and it's usually going to be a very strong uptrend. The kicker signal is the most powerful signal of all the candlestick signals. And as we go through this training, we'll see all the different positive ramifications of a kicker signal, such as gapping back up through a T-line, number one, or coming out of the oversold area, number two, and especially just even the fact that it gapped up away from the previous trading illustrates there's been a strong change of investor sentiment, and it's not going to be a short-lived change of investor sentiment. It's probably something that has changed the fundamental outlook for this whatever trend or whatever trading entity, that the trend is going to continue for a while. There will be times where you see a kicker signal forming, but it didn't quite open above the previous day's open, and it did have a tail below it. But the symptom is the same, or the prognosis is the same. It's probably changed your investor sentiment. Now you just watch your other parameters of whether it stays above the T-line until you see a sell signal. But it also gives that indication there's been a change of investor sentiment. The kicker signal is very obvious. If you're watching a downtrend, let's say you're even short, and they gap it up the next day above the previous day's open, especially with stochastics toward the lower end of the trading area, close it out immediately. because if the kicker signal starts moving in this direction, as your short position, you're going to get burnt. Get out immediately, because if this is in a downtrend, they shouldn't be gapping it up above the previous day's open and start moving in the opposite direction. I tell folks myself that if I saw something like this, I'd been short, and they gap it up the next day on some news, my hope was that they'd bring it back down one more time just to let me out, and then they could take it up. But I discovered through years of experience that if they gap it up above the previous day's open, there's only one thing you need to do, and that's close out the position. Now, if it starts trading positive, you know what type of formation it's going to do. You don't have to be sitting there worrying about it. You're out of the position. You can think clearly about going in the opposite direction. And the kicker signal, especially in the oversold area, doing a little kicker signal, gapping up from the previous day's open and closing right on the T-line makes it very simple. This has been a very strong reversal. Now all we need to see is a positive open the next day. We know that this next trend is going to be fairly strong. So it makes our entry strategy very simple. If we see a positive open through the T-line after a kicker signal, you want to be buying immediately. A kicker signal, a close right on the T-line. If they open up positive, they're basically telling us they're confirming the kicker signal. Again, the strongest reversal signal of all the candlesticks, and that they're going to start taking the uptrend. So now you just watch to see what happens at the T-line. If you're right in the congestion area of all the moving averages and you see a kicker signal, what result should be expected? You should expect a nice strong uptrend. And because the kicker signal is a dramatic change of investor sentiment, it also, like all the other candlestick signals, tells you the bigger the gap up, the more powerful the change of investor sentiment was. So this is why we want to learn how to use candlestick analysis, especially identifying the 12 major signals. A lot of people say, I don't want to buy a stock that's already up 3, 5, 10, 15, 20, 30, 80%. You do if you recognize it as being a candlestick signal. Anytime you see a gap up from the previous day's downward candle and they start moving up positive, it doesn't matter if it's already up 40% or 80% or 100%. You want to be buying. There's something in that whatever made this move to tell you there's still going to be a lot more upside after that initial move. Back down to one basic element. The bigger the gap up, the higher the probability you're going to be starting in a very, very slow, steady uptrend. Not necessarily a slow, steady uptrend, an uptrend. A kicker signal doesn't matter where it occurs in a trend. If you're already in a trend and there's some pullback and they do a kicker signal, that's basically telling you whatever that information was going to continue that uptrend. So you can see a kicker signal. Remember, we don't want to see a candlestick buy signal in an overbought condition, or we don't want to see a candlestick sell signal in an oversold condition. However, if we see a candlestick buy signal or a candlestick kicker signal in an overbought condition, that basically tells you there's still a lot of force in that uptrend. It's going to continue to go higher. The nicest signal is seeing a downtrend followed by a gap up and a kicker signal going the opposite direction, and breaking the T-line, and breaking this downtrend, and bringing your stochastics back up. That is all the elements for a very strong price move. And although the perfect kicker signal is a big strong candle to the downside and a big strong candle to the upside, it still has relevance when the signals themselves or the formations aren't that big. It still represents the same thing. There is a change of investor sentiment that's probably going to bring you into a much higher price trend. The results of a kicker signal is this much strength, So if you start seeing something like it's bottoming and then you see a kicker signal come out of it, that tells you exactly what's happened down here at the level where you might see the buyers coming back in. They're not only getting back into this position, but they're getting into it with great force, which starts that strong uptrend. Anytime we see that kicker signal, even though it may not start out immediately in an upward direction, this has already given the message that somebody was trying to get in there very quickly. Any of the profit taking was taken up, then it started its up move. So don't get discouraged if you see a kicker signal and it doesn't immediately start acting well. It will. It's like that. This is the signal that told you that it's going to start moving higher. And that kicker signal with a gap up, the result is expected. You're going to expect, or you should expect, a very strong price move after that move. This jump from here, gapping up and going this direction, tells you something dramatically changed in investor sentiment, that whatever this trajectory was, you're probably now looking at a very strong trajectory to the upside. Just keep in mind that there's very rarely something that will gap a price up that dramatically and not have some follow through. This gap up was a result of something that took the trajectory of this downtrend and completely altered investor thinking going this way. This is another case where if you see a kicker signal forming, don't hesitate to get in. The only problem with a kicker signal is sometimes you have to move fast, so you have to know where your money is available, and it might not be in your game plan that day. But if you see a kicker signal, you want to do it because the results are going to have an extremely high probability of showing good profits. Even if this day here isn't a real whopping bullish day, it still represents the same thing. They were going in this direction as far as investor sentiment. Now they're going in this direction as far as investor sentiment. Again, very rarely will they gap it up because of whatever's occurred and immediately start pulling it back down. And remember, as with all candlestick signals, the bigger the signal, the more compelling there's been a change of investor sentiment. These are the type of kicker signals you like to see. A big down day followed by a big up day. That represents that something major has occurred. And it's even more compelling or more helpful to see it gap up above the T-line and continue positive. That makes the scenario much easier to comprehend. That once you get into that position, now you don't have anything to do other than stay in that position until you see a candlestick sell signal and a close back below the T-line. But the expectation should be that once this comes up above the T-line after a kicker signal, it's probably got a very strong uptrend potential. And all the other elements of strong reversal situations can also be applied to the kicker signal. Notice that this downtrend has moved away from the T-line. Now they have a kicker signal going from a red candle to a green candle. Where's the first likely target? Probably back up to the T-line. But remember, this is a kicker signal. The probabilities are that it's going to go right through the T-line. The T-line also is an indicator in this downtrend. They take it down, then do a kicker signal back up. They're going this way. This downward trend has been breached. The T-line's been breached. Your stochastics have turned, and the investor sentiment has changed. A kicker signal through any resistance level is very significant. They came down. Notice all the elements you could add to this analysis. A bearish candle that came down and touched the 50. Then they gapped it up and went the opposite direction through the resistance level with stochastics coming back up. This makes for a very high probability uptrend situation. And here's a situation that's very common. I say very common, but will happen, as we've seen in the past three charts, when they've pulled it back, here's a cradle or a fry pan bottom. We pulled it back, and then they've gapped it back up above the T-line and went positive. These are all indications that the resistance areas and the investor sentiment buildup is still in progress. You're probably going to, again, have a very strong price move based upon the fry pan bottom breakout, but also the stutter step kicker signal that got it back moving again. Anytime you see a kicker signal set up, you want to be a buyer. The probabilities are greatly in your favor, and that's basically all the Japanese rice traders have provided for us, is graphic depictions of investor sentiment that shows when there's a drastic change of investor sentiment and that we want to be going in the opposite direction of the previous trend. Remember, a doji followed by a gap up is your best friend. A little candle followed by a kicker type signal gap up, close above the T-line is your best friend. It tells you there's definitely a change of investor sentiment, and it's strong enough change to tell you you're probably going much higher. So all you have to do at that point is use your normal trend analysis, your J-hook pattern, but this is what instigated the uptrend. Big down day. The next day they gap it up. Notice there's a little tail here, and they took it up. Even though the true kicker is without the tail going this way, the fact they have a little tail here and then take it up doesn't deter from the strength that's built into this signal. Resistance levels and kicker signals are very important. You do a kicker signal through a resistance level, that tells you everybody knew there was a resistance level there. They still gapped this up through it and immediately went the opposite direction. That means everybody that was concerned about the resistance level doesn't care anymore. They are buying this stock in a new, with a new dynamic behind it. And the kicker signal is a very good, valuable tool for recognizing when a pattern's setting up, such as a J-hook pattern. If you're heading down and they start taking it back up with a kicker signal, that tells you there you've got a good possibility of another pattern set up like the J-hook. You want to be buying immediately. This is basically telling you not only is the force going to be strong, but it's probably going to be strong enough to get through the recent high and take you up into a much higher territory. Also, like any other candlestick signal, the bigger this reversal is, the more compelling there's been a change of investor sentiment. So even though your dark candle is relatively small, this candle being relatively big tells you once they open this up, they really wanted to get back into this, and that whole evaluation scene right here is that there's been a definite change of investor sentiment. Kicker signal right here on the 200. That may not be the 200, but on a moving average and closing above the T-line. Just more evidence that there's been a change of heart in the bears. Now the bulls have taken control. And the little gap up going the opposite direction, that's all just evidence that there's been that change. So anytime you see a downtrend, you're getting into the oversold area, not necessarily in the oversold area, but if you are in the oversold area and you see them gap it up the opposite direction, that tells you this oversold condition has now changed. They're going to take it back up to the next, at least the next resistance level. The kicker signal is the powerful element of this analysis. Again, that little tail to the downside shouldn't be there, but it doesn't hurt. It still has that, it gives you the evidence that they were going in this direction. Now they've reversed and going in this direction. This chart tells a complete story. Doji, gap up, strong uptrend, pullback. Where did they pull it back to? They went through the 200. They pulled it back to the 200. Started to see an indecisive trading. Then they've kicked it back up. That tells you, with this acting as support, and a close back up above the T-line, once again, you've got a strong argument for the bulls starting to take control. And support level can be anything, like a double bottom situation. We see our inverted hammer starts the uptrend. Bulls are happy. Bears step back in, knock it back down. Kicker signal this time. That tells the bears, shoot, the bulls are back here again. Get me out of the way. Especially on that strong a signal, that's what starts your big uptrends. Or your support area can be one of the moving averages. Also right at the same level that it bottomed out before. We're looking for as many elements that we can to analyze a chart to see when the bulls have taken control. And we definitely know they've taken control when they gap it up and start moving the opposite direction. Remember, the bigger this candle gap up and go in the opposite direction, the higher the probability that the uptrend has started. This is a nice, clean looking kicker signal. So if there's times where it closed down here and you're thinking about buying up here and it's already up 8, 10, 12, 15, 20%, if it's a kicker signal, it's telling you there's going to be more upside. Don't let the magnitude of what has already occurred deter you from taking advantage of what the future of that trend can be. And one of the nice things about knowing what the investor sentiment is in specific signals and formations is the identification of a flutter kicker signal. This has the element of a doji in between. A flutter kicker signal is very easy to identify. First of all, you have a downtrend. Now, what do we expect in a kicker signal? We expect to see a gap up above the previous day's open. However, if you see it just do a doji, we still have the element that they gapped it up above the previous day's open. That showed some strength. Now we have the simple rule of the doji. The price is going to move in the direction of how they open it after a doji. So if they open up positive and start moving up, you want to be buying immediately. So the advantage that a flutter kicker provides for us is if we know what should happen after a doji, we can be all set up for it. We don't have to be racing around looking for funds to buy a kicker signal when it's in progress. This makes it very simple. If they open up positive after a doji, we know it's going to move in the direction of how they open it. So essentially, if you took the doji out of this equation, you'd have a down day followed by a gap up bullish day. This flutter doji in here allows us to get in or identify a potential trade and get in at our own basis. The flutter kicker is easily identified by that gap up. Notice how they gapped us up above the previous day's open. Now you had a lot of swing in here. Now most investors wouldn't know what to do with that. Candlestick investor knows that if this finishes up as a doji, we want to be ready to buy on positive trading. And or if you bought this on a positive open anticipating a kicker signal, we just have a very simple confirmation that we're in an uptrend by seeing that they open up positive the next day and start taking it positive. Down day, gap up doji, gap up after a doji tells us we're moving in this direction. If you took out the doji, you'd essentially have a gap up kicker signal. Gap up where they open it right at the previous day's close or open, and then the next day they opened it right at the previous day's close. When you started seeing it move forward, that was the time to be buying. Just allows you to not have to rush into something. You can see the analysis of the formation being put together. Just buy on strength after the doji. And the result of a kicker or flutter kicker is going to be the same as a kicker signal. You should anticipate there's going to be a good strong uptrend after that signal formation. So not only does it represent that the downtrend has stopped, But it also gives the day trader a very high probability trade. That if they see this open after a doji, after it gapped up above the previous day's open, even a day trader can get in and out of this with a knowing that they've got an extremely high probability of making money off of that trade. So witnessing that doji gap up above the previous day, or previous day's open, also allows you to analyze whether this would be a successful trade or not. Basically tells you if they open up positive, what are they doing? Number one, they're showing that the 50-day moving average isn't going to be acting as resistance anymore. Number two, we know we would be moving in the right direction because it's going to move in the direction of how they open it after a doji. Three, it's closing above the T line. And four, we can see the stochastic start coming up. When you add all those elements together, that puts you in a probability situation that you're going to be in an uptrend. Obviously, the gap up doji tells you that there's more strength, so it gives you a greater probability that if it opens positive the next day, you want to be buying. In this case, a positive open not only closed above the T line, but they just barely closed above the 50, making this very easy at that point to tell you that they should be moving positive. You don't want to see it close back down below the T line. The flutter kicker signal is just an easy, identifiable pattern, and it has a very good alert to it. That doji gap up at the previous day's open should be the alert that you want to watch the next day to see how they open this and how they trade that position. The same elements of a normal kicker signal work with a flutter kicker signal. The bigger this candle is to the downside, followed by a gap up, and the bigger this candle is to the upside, still a very strong reversal with just a doji in between. Take the doji out and you've got a nice kicker signal that represents the same thing. There's been a drastic change of investor sentiment. So identifying a reversal becomes relatively easy just based on how a price moves after a downtrend. Gap up. Anytime you see a gap up in an oversold condition, you want to pay attention to it. Gap up doji followed by another gap up tells you you're probably in an uptrend. Here we just have a little kicker signal. Dark day, not necessarily what we'd call a major kicker signal, but if you have a down day and the next day they gap it up and go the opposite direction, opening up at the same level it opened before and went the opposite direction or went down, you essentially have a kicker signal which tells us good information. We're breaking out through this level. And signals, even though the kicker signal is a powerful signal in itself, it can still be accumulated with other signals, such as a bullish harami, then another down day, then the kicker signal, flutter kicker signal set up. This all added together tells you this is where they were bottoming and this is where they came in with strong buying. This formation is what we call kind of a trend kicker signal. Notice you already had started an uptrend, then it pulled back a little bit. So your uptrend was already starting with that doji gap up. Then they pulled it back, but the next day when they open up positive above the previous day's open and go the opposite direction, you've got kind of a little kicker signal. Even though it's not at the bottom, it's telling you that this trend still has a lot of force in it. There's going to be a lot more upside to it. And even when your bullish candle isn't majorly bullish, it still represents the same thing when you're right on the T line. They gapped it up, and then they had a bullish candle after the doji, which puts you up above the T line. Now you've got a buy signal that only has one criteria that you have to, or two criteria. As long as you stay above the T line and don't see a candlestick sell signal and a close below the T line, you're good to stay in it until you see that reversal. Bullish candle, you have your doji, your bullish engulfing signal, down day, then kind of a kicker signal to the upside, telling you, again, this trend kicker tells you there's more strength in this trend. It's going to continue higher. Again, if you can see a support level where they've stopped the downtrend, took it back up, notice how far away you were from the T-line. They took it up. Where was the first resistance? Back to the T-line. They pulled it back. That would have had you out of the position, but here's a case where if you got in and got out, or got out as they gapped it down, you get right back in again when you see a very strong signal like the kicker signal, because if they come back up above the T-line, what's that tell you? Basically, you're in an uptrend. If they come up through that T-line with a kicker signal, that tells you definitely you're in an uptrend. And if you can identify that it was a second bottom or a double bottom, that's that much more evidence that the bears are getting out of the way, the bulls are controlling. This is one of your best signals in investing, is seeing that there's been a dramatic change of investor sentiment, that you've changed the downtrend. The reversal signal closes above the T-line. You've definitely changed your downtrend into a strong uptrend. The flutter kicker, just as powerful as a kicker signal, just gives you a little bit more time to get prepared for it and analyze when to get into it. It will still have the same result. The expected result that we expect from all kicker signals is a very strong price trend. And the kicker signal is even more compelling when it's bouncing off a moving average that everybody else is watching to see what it's going to do with that moving average. When your stochastics are in the oversold area, it's basically telling you that this downtrending channel has now been breached and you're in an uptrend. So the reason we've done so much repetitive analysis of charts is so that your eye can recognize that any time you see that gap up above the previous day's open and they start trading up positive, you want to be buying immediately. You don't have to sit there and analyze whether you should be getting in or not, whether the price is too high to get in already. You buy a kicker signal even when it's in the making. Turning that whole process around gives you a bearish kicker signal. You're in an uptrend. Your last day of the uptrend opens here, closes here. The next day they open it at or below the previous day's open and go the opposite direction. In my old days, if I was all happy, thinking about all the money I'm making in this trend, and then they gap it down, first thing I'm thinking is, we're checking to see what news was that gapped it down. Next thing I'm thinking is, boy, if they would just bring it up, I'm smart enough to get out when they bring it back up. But they don't. If you see an uptrending situation and then they gap it down below the previous day's open, only have one thing to do: close out the position immediately. Once you do that, you now have a clear head to think what you should be doing next, which might be, if you see them taking it down, start going short. A gap down below the previous day's open just tells you that they have given up the ghost. They're not in an uptrend anymore. This chart was easy to analyze because they gapped it down below the T-line, number one. Number two, they started trading it down below this little support level. That told us we were in a downtrend. And as with all our candlestick analysis and the signals, the bigger the gap down, the bigger the signal, the higher the probability there's been a definite change of investor sentiment. Now they're in a downtrend until you see a buy signal. And as with all candlestick signals, the bigger those signal reversal is, big candle this direction, gap down going this direction, the higher the probability this trend is going to be in that direction. A gap down below the previous open, especially with your stochastics in a downward direction, just gives you one piece of information, and that's close out the position immediately. Remember, these signals were developed by Japanese rice traders over 400 years. These aren't low probability situations. The reason we're looking at these type of signals today is based upon not only the Japanese rice traders being successful, but they were legendarily wealthy based upon their use of candlestick analysis. We don't want to give up that information. Remember, there's one element that is consistent in trend analysis or price analysis. Investor sentiment is always the same. It doesn't change. And always observe the obvious. If you're just now getting to a resistance level and they gap it back down through it, that tells you one good piece of information. They aren't going higher. They've resisted at that resistance level, especially with a kicker signal breaking to the downside. They're going back down much lower. Same parameters that we use with all other signals. The further away you move from the T-line, the higher the probability they're going to come back and test it. If they do a kicker signal to come down and test it, that tells you there might be enough strength not even to support at the T-line. They could be going much lower. Anytime you see a trend and then they gap it down below the previous day's open, close it out immediately. If this isn't an uptrend, they shouldn't be gapping it down below the open of the last bullish candle. And knowing what the ramifications of a kicker signal are, or a flutter kicker signal, and also knowing the ramifications of a close back below the T-line and the 50-day moving average and stochastics rolling over, we can now assess that this is a very strong short situation. We could be going short here until we see a candlestick buy signal and a close back up above the T-line. Just like in the bullish kicker signal that has occurred at a major support level, the same scenario is true when you see a bearish kicker signal occurring right at a resistance level. It's time to go short. A gap down bearish kicker signal through a T-line makes it very easy. We know the force is strong. We know we can be shorting, and we only have one parameter to worry about then. A buy signal and a close back up above the T-line. Stay short. The bigger that gap down, the more force there is to the downside. Most people, I say most people, I used to be this way myself, you're in this, and they gap it way down here, what's the first thing we all try to do? Man, are they going to bring it back up? I'd hate to sell it here, and they bring it right back up again. If they've gapped it down below the previous day's open, get out of it immediately. Then you can start figuring out what to do from there. The further you move away from the T-line, the higher the probability they're going to come back and test it. And if they gap down below the previous day's open to get there, that means there may not be enough strength left in the uptrend to hold the T-line. They could be taking it down a lot further. Whenever you start seeing gap ups in the overbought condition, start watching for your sell signal. Lesson from all this is if you see a gap down below the previous day's open, don't sit there and hope that they're going to take it back up. Close out the position immediately. Then you can decide what to do from that level. Anytime they gap down, the probabilities are pretty strong that they're in a bearish kicker situation. Gives you an opportunity to be out of the position and then analyzing, saying they're really knocking this down. It's time to go short. That's a kicker signal to the downside. If you're in an uptrend and you're happy, and they gap it down and start taking it down, close out the position. That's exactly what this signal is telling you to do. Not only close out the position, but get ready to go short. Add all the elements you can to any of your chart analysis or signal analysis. Kicker signal to the downside, a failure of the 50, a failure of the T-line, stochastics heading over. Obviously, this has become a resistance level. Obviously, these support levels aren't acting as support anymore. Go short. The Japanese rice traders make it just very easy to see visually what's going on in investor sentiment. If you always come back to one basic element, that the candlestick signals are the cumulative knowledge of everybody buying and selling during a specific time frame, it'll make it very easy to say, common sense wise, what should I be doing in one of these positions, or what should I be doing right now? And that will keep a lot of the emotional decision making faux pas out of your decision making for investing. That will be it for our training on the kicker signal. Again, the kicker signal is the strongest candlestick signal out of all of them. You don't have to worry about where the stochastics are. You don't have to worry about where you are in a trend when you see a kicker signal. A kicker signal is telling you there is investor sentiment that is changing the direction no matter where it's occurring. The description of a kicker signal is very easy. There are formulas that you can apply to any of your charting techniques or charting services to identify the kicker signal. That should be one of your first scans every day. It's to see if there was a kicker signal that occurred the previous day in one of the chart situations. That will be it. We'll see you in the chat rooms. Thank you for listening.